TFNN takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Guys, welcome back to the show. Hope you're seeing my screen. We were finishing up with crude oil, and we were talking about a soybean trade that John from Philadelphia had mentioned. It's just worked out incredibly well. Talking about trading some options with that trade. Let's take a look at the financials, and we're going to take a look at the 10-year. We're going to take a look at a couple of other things. We were trying to get Juan from South America on today, but it looks like we're having a few little issues with that, so we're going to keep marching forward. The financials, we're going to take a look at the 10-year first. Again, yesterday Joey and I were talking about, what's the easier trade. Trying to play around with the S&Ps every day is difficult. I admit that. And we obviously have had a pretty serious run past some areas we talked about yesterday, which, again, that's what stops are for. We've tried to figure out, how we can get the odds in our favor to even put a trade on. And at the time, we felt like we had some decent odds there. The 10-year also, we talked about, okay, we've got a new profile attempting to appear, a new profile locked in yesterday. Here's support on it now. It's pretty plain to see. 130.07. There it is. We've reached a low this morning of 130.11.5. And instead of, again, put a gun to my head and force me to trade one of the instruments, we talked about, let's just take a look at trying to buy the dip on the inflection points of the range instead of shorting that on the 10-year relative to looking at the S&Ps as the stronger, easier trade. So, again, I'm looking at this as buy support around 130.07 on the 10-year going into the financials before we get into the S&Ps. You know what? Let's flash the S&Ps really quick here, guys. This is real-time S&Ps. We're trading 2066. That unfair high on the daily is 2065.5, rounded off 2066. So we're sitting right there. We're going to take a look at breadth and a couple other things. I mean, this is kind of scary for shorts, I'll admit it. And I got stopped out of this trade. This is one of the times I felt like the odds were really in our favor to look at this from the short side, looking at our breadth calculations. And in the short run, having a pullback to 2018, that obviously didn't happen. And that's what stops are for. But as we're going to come back to that, we're going to look at the financials really quick here. And again, with the widening yield curve situation, and we're trading 2267 this morning. We're getting some prints off right now. Talked about hoping that would get back up into this situation, 2237. And I cannot see. 2237. So again, the S&P is doing what they're doing. The 10-year looking like, it's coming off sympathetically, at least with the market rallying. We could be finding support on the 10-year. The financials, in my opinion, not the sector to be long in right now. So again, looking at trying to block out one side of the marketplace on a relativity type trade, financials, again, 10-year, just barely coming off the highs with the market rallying here. And, nobody looking like they want to get out of that trade on the long side in a big way. Financials still looking relatively weak. And if you're looking for something to play around with here, if the market, the broad stock market is at an inflection point up top, in my opinion, we could go higher, we could go lower, but the financials, and we're going to talk about which way we're going to take a stance on the market in a little bit. The financials are not the longs to be in, all right? So, again, we're looking at relatively weak sector situations here with the 10-year and the S&Ps taken into consideration. J.P. Morgan also, I read, was laying off, more investment banking type people in Asia. I don't think that really has a bearing on the banking stock. So don't get caught up in news like that. This is kind of a step back and look at the broad situation as far as financials needing a widening yield curve, market elevating itself, and this particular sector showing itself. Let's hit gold really quick, and I mean we're going to come back eventually to the S&Ps. You know that. We've pulled back into that kind of breakout before 1242, 1243. This is if you're looking for a place to pick a battle, we didn't have anything yesterday, and now you've got some inflection points to pay attention to here on the long side. Again, market's on its highs in this recent move, so now we're going to come back and look at it. We talked about the Shanghai and we talked about crude oil, and the market has loved both of those things. This is pretty much, in my opinion, why we have moved up. We're going to reference the scanner really quick before we start talking about the S&Ps. You know, not a big crazy gyration in underlying instruments. I've never heard that sound out of my phone. In underlying instruments, I mean, basically you got 161 above, 105 below, and 228 in the middle here now. Not a lot of external new box above, new box below situations here. You know, I'm not exactly thrilled, again, still about buying the S&Ps, but as Tom was saying a few times, you know, we could have a move up here before we have a move down and squeeze some people out, and I think he's still on that same bandwagon. You've got 2095, 96 above to try to pick this again, but again, that's kind of recent highs. So, and I sound like I'm leaving the door open for everything. I had a question in the den right now. Did I say that the financials are not the place to be long or short? Missed it. Yeah, I mean, I'm not a big fan of being long the financials. I think the deck's stacked against them right now. If you put a gun to my head and pick something to be long, I would say, you know, I'd just leave that alone. I'm looking at the market here coming up into inflection points. The internal's not looking crazy good, but this is the problem. If the Shanghai continues to go higher, this market's just going to get happy, as if, you know, the second largest economy in the world is starting to get some go-go juice to it. That's the risk here. But again, you've got inflection points at 2066, rounded it off. I think we're trading 2066 right now. And then you've got another one at 2095, 96 up there. Is that what I said? 2095, 2096 rounded off. So if you're going to play around with the shorts, this is an area to deal with it. With stops in force, of course. And then you've got a chance to pick it up again later. But, you know, you've got to keep your eye on the Shanghai. And you've also got to keep an eye on oil because, in my opinion, that's why this thing has kind of elevated itself. I think oil's going to, you know, possibly settle back here. And the Shanghai, even though we had a close just in a smidget way right above those two inflection points on the daily and weekly, that could settle back. So I'm not opposed to trying to pick, just like we tried 2046, that general area. I'm not opposed to trying to pick a battle a little bit higher here at this inflection point. You do have the internals all positive across the board when it comes to the breadth situation. But remember, the Shanghai and oil are at critical areas. All right. And sometimes some of the best trades are the scariest trades. So remember to put your stops in if you're going to try this short right now. We could have a ride down still to explore that to that 2018 area. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And I've got the Japanese yen up right now. We're going to come back and talk about some of these currencies. We talked about a new profile attempting to appear. Obviously some decent news coming out of Japan that they're going to still be on the, cause the currency to get deflated mode. But I think we've got a caller. Daisy, are you there?
Yes.
How are you?
Okay, how are you?
Doing all right. What's on your mind?
I want to say thank you also for your conversations with Joey. They're always very stimulating to hear the two of you go back and forth. I love it.
Oh, wow. Thanks. I'll tell him that. I hope he's listening right now. But thank you.
And he had mentioned several times this year solar, and I never knew what to do about it. But I just noticed Solar City rocketing up recently. And I wondered what your take is on it and whether or not there's a buy in there, a buy price, and a stop, or stay away.
Okay, so I've got the daily up right now. I don't know if you're seeing this.
Sort of. I'm on the website, and I can see the small screen.
Okay, all right. You know how to blow that up, though, right? If you want to make it larger?
Yeah.
Okay, cool. Well, Daisy, Joey's been a big proponent of this, and it's been interesting watching it, watching some of these solar stocks relative to what crude oil is doing. So, just from a basic standpoint, crude oil goes higher a little bit, then, these things might get a little momentum. I'm not a huge fan of crude oil going down tremendously, but I don't think it's got the possibility to really go a ton higher right now unless they do some really serious squeezing of supply or shortening of supply at these talks that are coming up. But we're at inflection points on that. But again, I think the relative strength of this, just looking at this individual stock, Solar City, SCTY, guys, you've got some support here at 26.90. As you've seen before, we kind of got up into this inflection point here. It's probably a little bit of delay on what you're seeing on your screen right now, what I'm talking about. And then you got resistance there, you got support there. Now we've broken above resistance, come back and retested it, and it looks like, we may be clean and clear to go a little bit higher. So 2690 is a big inflection point, and then you've also got, this 2158 down here. Now that's a real big range. In fact, what is it? That is what is 5 divided by 25? I'm losing my mind. 4 or 5% move. You don't want to probably suffer that. So what I would suggest is, if you want to be long this, and it looks like a decent long, we may have a little bit of a pullback in crude oil, so you got to be aware of that this thing might pull back based on that alone. But below 2690, you got to put stops, in my opinion, and that's also based around looking at the weekly too. There's 2623. So the cool thing is we've broken above both profiles on both long-term time frames, and you can play defense around that inflection point, in my opinion. If you get stopped out, you get stopped out. But I think you're on the right path here. And Joey, he's not the the guy who's never wrong. But I'm telling you, he's a smart, very smart guy. He's run some serious trading desks, and he usually has some decent information. And why did he pick this out? Because, I'll be honest with you, everywhere around here, I'm in eastern North Carolina right now. There seems to be, for some crazy reason, this is not God's gift to the sun world, if you know what I mean. There's a solar panel farm popping up on every remote highway around here, it seems like right now. So I think, there's some fundamental reasons to be long these stocks, but I also think that there's some good technical reasons right now also. Good. Yeah. I'm not telling you to go out there and back the truck up, as Tucker would say.
Right.
but it's a decent looking technical situation. And I think the fundamentals are pretty ripe too.
Okay, and so you think it's tied to oil and not the market tanking at some point?
Yeah, these things are going to have a lot of volatility because this industry is kind of narrow. But, I think, oil at best, I think, is going to churn around at worst is going to churn around sideways here. I don't think we're going to have any, $29 oil again, which would obviously, I think, bring this down. But if you look at the way oil has acted and how these solar stocks have acted while oil was, doing the dance it did on the way down, it has acted relatively well on some of the the oil pricing that's happened lately. And the good news is we've broken out above these balanced areas on the daily and weekly. And what it will usually do at that point is try to figure out where's the new balanced area. It'll search and kind of probe for that. But I think we always try to talk about, where do you play defense first? That's the first thing that comes to my mind. And now I know that there's a place to play defense below this, 26 general area.
All right.
And unfortunately, getting stopped out is a part of the trading game, as you know. But don't, in my opinion, don't get married to it and start doubling down on it if it goes south. It is what it is. When the stops happen.
And you don't have any long-term aspect that you can dive into, right? On the.
You mean targets?
Yeah.
I think I think the first target's going to be around 35 and a half. It's going to be meeting some form of resistance around there. That's another weekly top of the profile. Remember, what these profiles do is they analyze volume relative to price. And what before, this was a pretty serious inflection point from before, around 35 and a half. So you've got to pay attention to that. And if we get a move like that, that will be, even without a new profile appearing on our end in the current time frame, you got to pay attention to those inflection points, and you could leg out of some of it at that point if we get up that way. And that's not a bad thing. I mean, you've got what is that, a 5 divided by 3? That's, what's 5 divided by 30? I'm losing my mind this morning. 5 into 30 is 6%.
Yeah.
30 divided by 5. What am I doing here? Let me just do it really quick. Well, that's actually 12. I'm losing it. Is that a 17%? 17% move. 15% move. If we have a move like that, that's not a bad play in a return on the stock. So,
right. Okay.
All right. Well, thanks for calling, Daisy.
Thank you so much.
You're welcome.
Bye-bye.
Okay, bye. Guys, we're going to go to break and come back and hit a couple other usual suspects, and then we're going to look at some currencies.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And Daisy, thanks so much for calling. That was a great question. And somebody in the den was reminding me, if you don't have the den up, you should have the den up. Some of the guys were saying that David White talks quite a bit about that, the solar industry, and it might be a good idea to on his show, which I think runs from 2 to 3 every day, unless they've changed it, to be able to call in and maybe ask him about that. And also, when I'm put on the spot, I cannot do math. So 5 divided by 30 is 16 and 2/3%. So I was sounding quite stupid a while ago. And that's a good move. So if you're looking for a move in this on the north side on SCTY, that move up to 35 would be approximately actually we're at 29 and some change right now, so it would even be better than 16 and 2/3%. All righty. You know what, Tucker? I've had a Toyota also. I was telling people I had a Datsun at one point. That was the rustiest truck. I mean, you could coat it with titanium and it would still rust. But yeah, back then that was wild, huh? In the late 70s. Cheap little trucks. Anyway, let's take a look at the dollar. We've had a pretty good bounce here. And I told you that there wasn't a lot of things to hang on to down here, but now we're going to get some new inflection points. And now, again, I know you guys are probably saying, "Well, God, why didn't you tell us to back the truck up yesterday?" This indication is an indication for taking off shorts more than anything else. When this thing starts flashing yellow, and I'm going to go into the scanner, and I'm going to pull up the futures section, and I'm going to go down to the dollar. That little yellow peel back happening is not, hey, wow, let's back the truck up and go long. It's more of an indication that we're going to get a new profile more than likely. If you've been short on an intermediate basis, it's telling you, and it was flashing a lot earlier than right now. It might be time to start taking some weight off because we're going to get a whole new balanced area here, and we could explore the entire fair auction to the top of that profile. All right, so it's almost like a trailing stop, and it's based around quite a few things when this algorithm decides to start outputting a new balanced area. But the good news is, I think Tom's been pretty bearish on this product. He's been right on this, and when we get some new inflection points, now you've got a chance to look at this possibly again from the short side, but you've also got something to lean on from the long side down below. And I know I'm giving myself an out on two ways here, but right now this is kind of a do nothing, and we've got to wait for that new profile to come out. We're going to be looking around at some other products to kind of make a decision on the dollar, but the long-term weekly is still in force on the south side. There's no indications to take this off yet, so I would be inclined to try to sell the top of the box on the daily until we're told differently. And that would mean putting stops and being able to play defense around the top of the profile. I don't know if okay, so we're going to look at some currencies. The dollar is obviously bouncing here. The euro, this was something I thought was going to hold up. Again, the big number we talked about was around this 1350 area. That was a previous unfair high where we had been in force forever. We're breaking that right now. The DMZ, if you will, was the bottom of this box here on the daily. 131.11.12. I'm looking at this more of a long-term situation. The dollar having that new profile is not good for this. But again, considering that we have broken out on the weekly on the euro, I'm looking at this in a little bit of a way of buying support here for another bounce up on the euro in this 113.50 down into this unfair low on the daily. But this is again where you play defense and orient stops around that particular move if it goes farther south there. The yen, again, they've had a lot of decent fundamental news out that the Bank of Japan is going to step in, blah blah blah, whatever, and do what they have to do. But I kind of wanted to, if they're going to have news like that, you want to see this react a lot more violently on the upside. Again, new profile attempting to appear yesterday. We talked about that while we're on the show. We have a new profile, and that 109.61, I think, in my opinion, because no matter what the fundamental news is out there, you still have this thing going on. We're still below profiles, and you're still in this downtrend, and you're supposed to be selling inflection points just by default when they're offered 109.61. We reached a high today of 109.39, so we haven't quite gotten there. Again, I think we could rally a little bit more, but when we get into that area, that's where you're going to pick your battle if you're just following this kind of rote way of looking at the profiles. And again, I think that fundamental news should have bounced this a lot more. So I kind of like this still on the short side at 109.61 now. Nobody cares about Brexit, huh? $143.43 on the British pound. We don't talk about this a lot. This is going to be really news driven now as we compress into June when they have this vote. I'm staying away from this altogether. Aussie dollar is still a great long trade. Buy support when it's offered. Here's the here's where we were yesterday, and I think the 240s are just going to be able to regulate this out. Now 240 support 76.08. We've already kind of closed above, gone back and retested that. So, right now this is a long-term play for me. I still like this going up past 80. And you can orient stops, I think, on a long-term trade below 76, 75, 70, something like that, and just try to hang in there with this trade. Canadian dollar, obviously liking the price of oil going up. Here's the situation here. We talked about, the breakthrough on the downside. We talked about staying away from the longs on this. But right now, I think, you've got an oil situation. I think that around this 41.5 area, this is where we talked about oil. Good chance of reaching that area and being able to play it possibly on the south side. You got a chance for a bounce here with stops below 127.64 to trade this against the breakdown that's happened back up into 129.73. That's the way I'm looking at the Canadian dollar. Okay, guys. Our last break before we come back and close the show, so stay tuned.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, guys, this is why you have to put stops in. I mean, we obviously were off a little bit on the S&Ps yesterday, but I want to pull up the scanner. Just take a step back and understand this. I'm on our weekly profiles in the ETFs, and we're talking about the S&Ps again. The magnetic S&Ps. It just draws you right to them every day. You don't want to get glued in on one specific instrument. We've talked about that a zillion times already. But on our long-term profiles, this is why you have to put stops in. I've been talking about playing around with these inflection points on the short side and the 10-year, the easier thing to trade and all that kind of stuff. But, you step back and you look at the internals. And I have this scanner running all day. It just stays on a specific screen over here. And I look at these breadth calculations, and I try to find relative weakness and relative strength within sectors. We talk about that a lot. A lot of the things we do pre-market are just, God, man, everybody's waking up drinking coffee, and all these things have happened across the globe, and oil's doing this and gold's doing this. It's all really to get an edge to try to, get some kind of outlook on where the broad situation is, and then try to play the internals against that broad situation. So when you look at these internals, these ETFs, long-term, they're all positive. I mean, that's the scary situation, because if oil goes through this 42 area and the Shanghai pops, which it looks like it does, then the S&Ps are just going to get really happy again, right? That you can't count on that happening, but, that's why we have to put stops in when we're playing around with these shorts. And again, those are probably at this stage a lower probability situation, but I'm looking at the technicals, I'm looking at where oil is, I'm looking at where the Shanghai is, and we are at these inflection points, and we have climbed up into them, and you've got to pay attention to those long-term profiles, all right? So, but that being said, we do have, kind of positivity across the board here. The only one that's showing some weakness on an intermediate is a discretionary, and that's barely showing that on. That's just a mixed bag between long-term and intermediate. I'm going to go right into the energy sector, which is, the number one on our intermediate. And we've been talking about, if you're going to play oil, sometimes it's better to look at some of these individual and look at the sea of green here. This has been the case in this sector, and we can't cover everything I want to talk about every day. But if you look at this, somebody asked about SWN again. I mean, this is one of these stocks, just this real low-risk little situation that we've been paying attention to and trying to say, hey, let's put some stops below 675, that general area on the daily, and then that's the 654, that DMZ, if you will. You got a really good defense line there. We propped pretty good yesterday and actually reached, 10.5 or even higher? So a lot of these stocks have been spring loaded, waiting for oil to do something. And now when you have these internals happening, as they have with, the strong of the strong and the ones that were trading above profiles, that relative strength trade when oil does make these, and this wasn't even a big move in oil. I mean, we're talking about going, what do we do, from high 30s to the low 40s at best? A lot of these stocks are just waiting for an indication to make these types of moves. So in the scanner, you can find relatively strong, relatively weak stocks. Let's just look at COG. I'm blindly looking at these right now. This is another one we had on the radar screen. Support had a move up. Let's look at HP. Wow, look at that. Right off these weekly unfair highs. Had a really good pop. Can't be dissatisfied with stuff like that, guys. Thanks for bringing that up, Tucker. Guys, stay tuned. Larry is next. We'll pick it up tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.